That's right. Hi guys, welcome to another webinar from Track Record. We're going to talk about uranium stocks going nuclear in this episode, right? So it's a theme that we cover a lot in our daily newsletter, and I guess it's time to talk more about it because prices are starting to move. So before we begin, disclaimer. So anything that we recommend, of course, is not investment advice. Please consult your own licensed financial advisor if you're going to take any of the materials that we discussed today. So housekeeping matters. The screen with our faces, you can actually move it if it's blocking any of the points that we're trying to present. So it's movable. Any questions along the way, you can add it into the Q&A box at the bottom of the screen. And we'll address your questions at the end of the webinar. So we want to thank our media partners, wealthenjoy.com, YouSavvy, and Online Traders Club. Welcome for joining us in tonight's webinar. So I'm Nicholas. Started in Chantillium and now at Track Record, also at Trident, managing assets and global macro and Bitcoin. So V also had his historic career in finance. Started 98 all the way back in Chase Manhattan Bank, even before it was JP Morgan. Headed several banks in Asia, and now he's at Track Record as well. So the agenda for today, introduction, we're going to do a brief recap of webinar trades, inflation scare, which is all the rage now in the markets, of course, one of the reasons for the sell-off, and then, of course, uranium stocks going nuclear, and then Q&A at the end. So I'll pass it on to V.
Hi, everybody. Welcome to our, I believe it's March webinar to talk about markets, right? A bit of correction to Nick's introduction of me. He says my historic career. I'm not that old. It is not yet history. I'm still okay. And he says I was head of a few Asian banks. It's also not true. I was the head of a few trading teams in a few banks in Asia. In any case, this is my background. My background was my background is in trading. I traded in various banks, and I also started at hedge funds. And Track Record it's my way of bringing Wall Street to Main Street. We've started at the beginning by providing institutional level training to hedge funds as well as to banks, and we found that there was a huge knowledge gap between professional institutional trading styles and trading methodologies, knowledge, and from the retail sector. Right, retail sector is quite often about looking at charts, squiggles, and trying to react to short-term news, thinking that you have an edge in the short term, whereas we believe that alpha is generated by looking for asymmetric risk reward trades. Asymmetric meaning you risk a small amount of money or a fixed amount of money for huge amounts of money, multiple X, right? And this is what we are trying to do. We try to do that by doing a few things. Of course, I talk about the institutional level type of training. Nick, can you help me click? I don't think mine is responding. Yeah, and also, I'm not sure why that is the case. Okay, so first of all, you'll notice that we are not that good at all these presentation things, right? And it's a comment that many people bring up. They say, "Oh, we could do better in presenting our slides or whatever." We are not professional presenters. We are not the typical trading academies that you have for the retail sector, where we have all the snazzy stuff. So I want to get that out of the way. It's very important to me. My background is trade. I trade for myself, and I trade for investors, and my primary purpose of this thing is to just share my ideas and share my methodology, right? I couldn't care less about the quality of the presentation skills that I have. You just have to bear with me, and I tell you the truth about my trading. So we have ups and we have downs. And Nick, please, can you please help me press again?
Sure.
I think something's wrong. Let me just do this again, right? So Wall Street type of training programs that we provide to banks and to hedge funds, we adapted it for the retail sector. And we found that our students still then have issues with trying to apply all this, because it's very different from what the typical retail traders are exposed to. So we came up with a daily commentaries, products, podcasts, and to share our ideas on a daily basis to show how it is how it is implemented during live markets, right? Real world trading. And of course, then again, we found that there was a gap still, that we needed to come up with model portfolios, which we were very averse to doing, because then it takes a lot of time to update. Then you get a lot of comments like, oh, you didn't tell me so, or whatever. But actually, we do tell you so. You just have to be part of our membership program. So at some point in this webinar, I'll be upfront with you. There's going to be a sales speech somewhere to tell you about our membership program. And the reason is because we are not a truly altruistic trading firm, a trading academy. Of course, you see on YouTube, there are people who tells you they want to tell you these things because you are such good friends to them, and they hate that the fact that the professionals crush it, and then you get crushed by the markets on a daily basis or a weekly basis, as demonstrated by recent events. But also professional gets crushed. So it's not an altruistic thing. I'm doing this because yes, it's great to share, but we have bills to pay, and we have a team to do all these things, right? So we will have a sales pitch at some point. If you find it very, very you're very averse to these things, please switch off right now, because it's going to come at some point. But I promise you this, though, we're going to tell you about the way that we trade, share a bit of our methodology. But to get true access to the top process, and as well as our trade selections is very important. We tell you the themes, but we don't really tell you exactly what we are doing, because then you just get it for free, right? There's no such thing as free lunch. So the model portfolio, the access that you need is behind a paywall, a premium membership program where you get podcasts and a bunch of stuff that I find really useful, and I hope you do too. And our members kind of do. I'll show you some testimonials, but I don't really want to waste time. So we go on ahead to tell you more about the way that we trade. So Nick, I think it doesn't work for me.
I help you move.
Yeah. So the portfolio, we on a monthly basis we do these seminars, these webinars. If you are new to us, then you'll see. I guess this is to show you a bit of FOMO, right? This is the webinars we've been doing once a month for some since I believe it's since before November. November we talk about Bitcoin. This is one of our central themes. We believe that Bitcoin is an emerging asset class, and it continues to be a dominant asset, and well-performing asset, right? Since we've talked about it, actually when we started preparing the webinar, it was in the 12 to 13,000, but when we actually had that webinar, it's 17,000, and now it's currently maybe 55, 56,000, something like that, right? It's probably going to change over time, but the returns are such that it's about 200%. Our target for the year is 80 to 85,000. If you are interested to know the reasons, please go find the webinar link. You can ask either Felicia or Irong, track record team, to point you in the right direction. And we trade in themes, right? Macro themes, right? So we name our teams so that we don't have to keep referring to this team, that team. But the resource scarcity theme, the stock that we talked about is up 50-something%. The energy renaissance theme, which is quite related to resource scarcity, but it's specifically about energy, the energy complex. It's doubled, and one of our main theme is the tech race, and it's expressed within the quite a few sectors in the tech AI race, but Micron, a semiconductor stock, is one of them. We have highlighted the semiconductor chip scarce bottleneck, supply constraint in the world. We truly believe that is a theme that is going to continue to dominate headlines in the weeks to come. Of course, in February, we talked about a stock as an extension to this tech race. It's suffered a little bit because of the tech meltdown in the last week, right? Last week, now it's slightly better, but last week, right? So we'll show you some charts now to show how it is. Of course, this is just it's Nick, maybe the next slide, to show you Bitcoin, right? Bitcoin, we got in there. Fortunately, it's always better to be lucky than to be good. It really didn't really put us any other stress except for the drawdowns that it comes from all-time highs every time it reaches all-time highs. Next, please. And this is the one of the stocks that we talked about in December. Feel free to go check out the webinar as well. It looks a good chart, right? It just keeps going up. This is the energy complex, Interior Resources. We talk about it still because we are holding it. In fact, we may revisit the theme at some point because we really believe that it's going to go much higher, right? And this is what we mean by asymmetric risk reward trades, right? We believe trades that we do should have multiple X returns as opposed to like 5-10% or whatever, right? So that's why we are very comfortable with so Micron. You know, it's gone well. It's had a huge drawdown earlier in the last 2 weeks, right? But it's still okay. It's still up. And the next one, the one that's down, I believe this is a Swiss Microtech. So you'll notice that it's not spoon-fed information, right? You have to see on the top left, right? A bit of the treasure hunt, but we still like it. It's a bit down, but we stay with it. But if you are paying attention, you'll see that we are down 8.something% on this, but we are okay with it because we have a risk-reward matrix where, you know, if we are risking 20% on this, we are looking to make 100% on this over long periods of time, and we are quite long-term traders. We are only short-term when we are wrong, when we have to cut it, and that's the way that it should be. Okay, so the inflation scare, this is what has been, we're just going to talk about markets, what has been transpiring, what is driving the markets. What has happened is that the US Treasury market, it was spooked by the inflation scare. Rates started to rise because of base effects, right? And this has been well stated by the Fed. They expect this to happen. They expect base effect. Base effects means inflation is measured as a change from, say, current month March to compared to last year's March prices. Last year, March, April, May, we had a COVID, if you still remember, and economies were all shut down all across the world. So prices all dropped quite a lot. And because now we are seeing some reopening in economies, prices have normalized a little bit. Because last year's base was much lower, so you see year-on-year changes in prices has gone up. So this is forewarned by the Fed already, so it's not a surprise to the Fed, but somehow it's a surprise to the market. I guess markets tend to extrapolate changes now to the future, right? So much like the average person, when he makes 5% a month, he starts to think, oh, I'm going to make 60% a year, and if I do this for 60, I do this for 10 years, I'm going to make 600%, I'm going to be rich, right? So I should just put in everything because I made 5% last month, I'm going to expect to make at least 5% this month, right? That's not the way that it works, and inflation certainly does not work this way. What Fed has said, this is going to be transitory. It's going to be transient. Nick, it's transient. It's not permanent, so it's expected to be temporary. There's a big difference between this one-time surge and an ongoing inflation. The Fed has tools. They reassure us they have tools to control ongoing inflation, but they do not expect it to be ongoing inflation. There's a guy asking, we are going to talk about uranium stocks. Yes, we are going to talk about uranium stocks. This is the background of the macro environment. This is how we trade. Again, if this is a little bit boring, please bear with me. This is just a recap of what we think the market is currently obsessed with, and uranium stocks have taken a tumble recently because of this, because of inflation scare, because of rotation of assets from what has worked to what has not worked, that's why Dow Jones is at all-time highs now, whereas certain stocks have taken a tumble, and we believe these are opportunities to be had. So Powell said that the Fed chairman has said that they are going to raise rates. They will consider raising rates when three conditions are met: when the labor market is at maximum employment, the US lost 10 million jobs, so that's going to take some time for them to recreate all these jobs, and for inflation to be sustainably at 2% and on track to be above 2% for some time, right? There's no intention to raise until these three conditions are met. So be mindful of that. I know markets tend to get ahead of themselves, as they did recently when rates went up because of inflation expectations. The red and blue line are the market measures of inflation expectations, and the horizontal blue line is the Fed target. Of course, it looks like, oh, it's shot above Fed target. That's the inflation expectations. So that's why markets panic a little bit. But if you look at the light green line, that is the preferred measure of inflation used by the Fed, and it is not really at 2%. It's in fact the last few prints have been trending lower, and that's why we had markets rally yesterday, because the inflation consumer price index was a bit lower than market expected. So the scare was the market jitters stabilized a bit, right? People become a bit more comfortable, right? So that's the market wrap, and because of this, we are very confident that the markets will eventually stabilize the rates, although at high levels. But the fact is, it is not going to overshoot so soon until we see inflation prints trending higher again. So the problem with the treasury market, the US treasury bond markets, why the yields went up higher, is because prices go down and then yields go higher, and the prices are going down because there's just a faster economic recovery. People are afraid of inflation. The Biden stimulus package, which will be passed on Friday, he will sign it into law on Friday. $1.9 trillion. They require massive amounts of borrowing from the U.S. Treasury. The green line is the borrowing from the Treasury. They are issuing bonds and borrowing money from the market, and the pink or vertical lines are foreign purchases. Foreign governments, typically Asian governments, they tend to buy a lot of U.S. Treasury bonds as part of their reserves management. They have massive FX reserves. They need to save in a capital market that has enough assets for them to buy, for them to store their wealth. And somehow in the recent past, in the last few months, they have started to not buy. Right? They have gone. There's a buyer strike from all these Asian governments. So the market is a bit afraid of that. That's why the bond auctions have become important, and we talk about that. And tonight, actually, there's a 30-year bond auction, and it's going to again take the focus of the market. And if it starts to, if it's not as bad as the markets feel, then it's going to again we have see interest rates in the longer maturities of these bond markets go lower, and we'll see equity markets go higher again, and we're starting to see that pre-market as well, right? So the other thing that we should watch for is the Fed's supplementary leverage ratio. It's called SLR, which they give bank exemptions so that banks can step up and buy more bonds, regardless of the balance sheet in spite of the previous balance sheet restrictions. So we expect the Fed to extend this SLR in their meeting in the middle of this month, and the market is not sure if this is going to happen. And these are the things that are preoccupying markets, the bond market right now. So what is different this time is that broad money, which is essentially a measure of amount of money in the system, it is going up by a lot. If you look at this chart, you will see that the we'll start with which line, Nick? The red line, probably, right? The red line is the year-on-year change of the Fed's balance sheet, which it shows the amount of U.S. bonds the Federal Reserve is buying. So they are directly financing the government now. They're buying from the government. They're lending money to the government. And the green line, is it green line next? The blue line. The blue line is broad money, so the amount of money in the system. And green line is the transfer payments from the government. And what we have seen is that even in the last QE, 2008, the last crisis, till 2004, although there was massive change in the Fed balance sheet, you see the spikes. Broad money did not really go up because the money was staying in the banking system. Banks were not making the loans. It was not really transferred to the general public at large. But this time it's different because what has happened is there's massive fiscal spending, massive fiscal policy. They're writing checks and putting in the hands of on the average person. And what has happened is these guys have gone out to spend. They have gone out to, in fact, start up Robinhood accounts and buying stocks and invested, right? So this is where it's different, right? Of course, those are famous last words, but truly, if you look at the M2, I don't want to use all these technical terms, but you look at this amount of money in the system is shot up. And if you look at this chart, it's from the Federal Reserve. It has to be right. You see the massive spike here. And it's because of this, we believe that asset markets are going to do really well. And if you look at the broad money supply of different growth since last year, since the start of the crisis, so different countries in the world, although Japan and Euro, they are also doing massive quantitative easing. The growth is not as big as seen in the US, which is 25%. And part of the reason is because, primarily the reason is because the Fed is spending a lot of money not the Fed, the government is spending a lot of money through their fiscal policies. And this is going to take a turn higher when Biden takes complete control of the policies, right, which he now has. He's got 1.9 trillion ready to be spent, and he's going to spend on a lot of infrastructure projects. Yeah. And so again, this is a chart to show you why it's so different. BOJ, although they have massive balance sheet, their assets, right, as a percentage of their GDP, you don't see the growth in broad money as high on the right-hand side chart, right? Yen is in fact, it's third of the three, and the highest of them all is the dollar broad money supply, right? Good. And finally, on this topic, the Biden administration is very focused on infrastructure building, green initiatives, carbon neutral policies, stimulus checks, and all this we believe will drive asset markets higher in the weeks to come. And on this chart, you see that in the past, between 1946 to 1980s, before the time of high inflation, it took a lot of years of the red line is basically the government bond yields, right? The blue line is GDP, is a measure of economic growth. So you could see that government bond yields were substantially lower than the economic growth, and it took a persistently long time for many years of this before inflation got out of control. And we believe that's the case. That's the case going forward as well. So I think the inflation story is just a scare for now. We will see markets reacting much like we've seen in recent past, but we believe those will be opportunities, right? And this fiscal wave is unprecedented. It is larger than the World War II spending that financed the US during the war years, right? And so as a result, we believe that's what's going to drive asset markets going forward. Nick, you want to explain these themes for them?
So as mentioned before, uranium, the theme that we talked about just now was a theme on scarcity, which is and inflation, right? So it's under fiat debasement and inflation. There's an update on the broad market of what's driving asset prices across every sector, right? So whether you're invested in uranium, in tech, or everything, rates is going to affect everything, right? Because nothing in the market happens in a silo. and it will affect everything. So that is why we covered the very important brief on what's happening right now in the main market. So for individual stocks, with access for access to members, we do it in the track record model portfolio. And this is an update of the performance, which we do every webinar on our track record model portfolio, incepted in 2018. So, of course, we did draw down from the peak of 210% to 186.56%, which is here on the right. And our Feb to March return was 54%, largely driven by our uranium holdings and returns on our option portfolio in energy stocks. Right, so to give a brief overview of what happened on why the returns maintained despite the sell-off in tech. Since 2021, energy and uranium, which are two themes which we were heavily invested in. If you recall, the themes in our model portfolio significantly outperformed the Nasdaq, right, and that is why our portfolio held up pretty well despite some huge volatility in the markets last month. So, of course, as we said at the start, there's no free lunch, so join our community membership to find out more. We do have a model FX portfolio as well, which we trade, and we do update our trades on there, as well as part of the community membership. So the community membership includes trade insights and trade opportunities, which we dispense in a timely manner via Slack. So everything that we do is dispensed real time. So in the community, you have traders and mentors who are experienced, some who are professional traders and some who are trading full time. And we do a timely update of our model portfolio. So each time we change positions or we enter new positions, we will give a detailed update in Slack, and then we will update the stock in our model portfolio for reference. And we do give concise and distilled information via our podcasts and newsletters, which we write every day and also a week ahead for subscribers. So the usual is $89 a month, and it's $59 a month for the first 8 signups only. So that is what we're offering, and that is our sales pitch that we talked about.
It's for the first month only, actually, Nick. So just for introduction, right? Right. So let's move on to this, right? So most of the track record members, who the track record community guys who have been with us for some time, you'll be very familiar with this. It's very interesting. I was interrupted earlier in my presentation. I was a bit distracted because there's this guy who says, I thought this was the uranium mining stocks we're talking about, right? And he says the uranium fuel cycle doesn't have anything to do with inflation. It's uncorrelated with the rest of the stock market. And then, of course, I think he exited or whatever. But I don't know. Maybe he's here or what, right? I think this is where we differ from many people, right? If you look at Twitter, right? If you look at Twitter, you see people who are Bitcoin fanatics, right? They'll sell their mother to buy Bitcoin, right? They'll say they'll if you insult Bitcoin, then they'll be very upset, right? For them, it's very personal. Like it's a privacy thing, it's the decentralized thing, it's the freedom thing, it's against governments and all that things, right? Whatever, right? And then there'll be people who are devoted to gold, as if gold is the best thing since sliced bread, right? It's like, oh, gold bug, right? It's a con. The banks are scamming us, right? They're manipulating the gold prices, and that's the reason for this rant, right? So please be patient with me. And then there's this uranium super cycle guys who think uranium for your information, the uranium super cycle is supposed to have happened for years, right? The reasons for it to happen has always been there for some time, right? And the reason for gold to go higher is also been there for some time, and the reason for Bitcoin to go higher is also go for some time. But in the real world, it doesn't happen in isolation, right? There are things that drive the markets that, for example, it used to be very important to talk about a trade war, right? Almost every other day there'll be a trade war headlines and the markets move. Now, if you talk about trade war, it doesn't really move that much, right? Nobody cares. And in fact, they don't talk about trade war anymore. Yes, partly the reason is because Trump is off. But even then, even when he was around, he talks about trade war, he hardly moved the markets at all. Because the markets are being driven by a few things, right? So we believe that it is my belief. Of course, there are many factors, but I believe there are 6 pillars to global macro, right? There's monetary policy, there's fiscal policy, there's capital flows, economic conditions, financial conditions, and geopolitics. And these are the reasons why we look at the markets this way, right? And when monetary policy, which is what I'm talking about, which is the Fed, unlimited money printing, has given rise to a lot of money in the system. The fiscal policy from the Biden government, especially, is poised to spend a lot of money on infrastructure projects, on ESG themes, and putting hands in the power in the putting money in the hands of consumer. This will all drive asset markets higher. Capital flows is such that now the countries around and geopolitics around the world is such that China is on a spending spree to stockpile strategic resources. I mean, these governments are not idiots, right? They know that the US government is now quite unfriendly towards them. They're talking about trying to stop semiconductor chip exports, technology exports. And the next thing that could happen is energy exports, right? Strategic resources. And economic conditions is such that it's important, right? It's such that we had a massive recession. And because of all this monetary fiscal policy, capital flows, we see the economic conditions poised to turn, right? It's going, I truly believe we are going to see unprecedented economic growth in the weeks and in the months to come in many regions across the world. And financial conditions, this is what is measured by how easy it is to borrow, how much money is in the system, like financial conditions. For example, if stock markets go up, the wealth effect, everybody feels rich, right? Everybody feels good, you're going to spend. Right? All these things all these things play into this theme of scarcity of resource, right? In times when everybody has money, energy, economic conditions are turning, energy needs go up. We need energy for many things. In the fiscal policy where they are doing infrastructure build, they are doing ESG, which is ESG. Nick, what's ESG? Brain freeze here.
Environmental, social.
Yes. Yeah, it's very social and green initiatives, right? Green initiatives. The governments around the world, they're trying to go carbon neutral by a certain number within a certain number of years, and the only way that this could be achieved, we believe, is through uranium, right? Energy independence, energy resource, strategic reserves pile up. And Nick will tell you more about this. So it's important to think in the markets in terms of this, right? So it's good. I was interrupted by a question like this so that I could reiterate why we don't look at themes in isolation. A lot of the things that we look at, all the themes, they have to fit within these pillars of global macro, as we call it. Okay. Anyway, thank you for being patient with this explanation. But thanks, Nick, please.
Yeah. So yes, so this is the uranium part, right? In which the context before was extremely important because, as we said, nothing happens in silo, and the reason why our portfolio held up pretty well was because we understood what was happening in the rates market, right? And we pivoted out of growth stocks and more into commodities, right? So to answer your question, it's extremely important to understand what's happening in the global markets, right? So renewables, the frailty of renewables has been exposed actually within the last 2 months, which I think is going to be extremely good for uranium because it makes people and governments realize that their current mandate of ESG is mostly a pipe dream, right? Where it is mostly centered around wind, solar, and water, right? Which, if you're going to power an entire continent using wind, solar, and water, it's going to be almost impossible to be carbon neutral by the time their mandate expires, right? So if you look at Texas, because of the polar vortex, which has been widely talked about in the past 2 months, temperatures have dropped drastically across the western continents. Wind turbines freezed up in Texas. which actually drove energy prices a lot higher, because Texas is one of the countries which was heavily invested in this alternative energy, and apparently it's not so friendly when the elements is against you, right? And Germany as well, a lot of solar panels blanketed, a lot of snow blanketed solar panels across the country. Wind turbines froze up, as you can see on the pictures on the right, and electricity generation fell down quite drastically for certain regions. And in Japan, various prefectures, including Fukushima, which was famous for wrong reasons many years ago, had 36% of its power, or had its wind turbines functioning at only 36% of its power, right? So this is the issue with current ESG mandates, right, which only focus on these three to achieve net zero carbon emissions, right? It is not going to happen, and it's going to be extremely hard unless you build a huge array of these alternatives, right? And coupled with that, actually, the building of these renewables, which include wind and solar, wind farms and solar specifically, actually uses a lot of rare earths to do so. And rare earths is extremely toxic to the environment. If you go and read up on protests in Malaysia against certain rare earth companies where they dump the toxic waste into the river, it is just it's mostly a pot calling the kettle black for a lot of reasons in these mandates, right? So the only answer later on, as we will talk about, of course, is uranium to really achieve net zero carbon emissions, right? So to show you guys the impact of what it has had on people in Japan, because of the failing of these windmills and solar panels, electricity prices shot up almost asymmetrically. This looks faster than Bitcoin's rise, right? In the last 2 months. In Texas as well, just one way up, right? One way up. And there are a lot of articles, if you can find it online, where households have received shocking bills, right, for their electricity bill for the month. And I'm sure these people would rather use coal instead of receiving debt crushing bills because of ESG mandates, right? And this is what is forcing a lot of people to rethink if their current trajectory of using the aforementioned three is sustainable. That's why we think that uranium is going to be in a huge super cycle, and it's little talked about, but it is gaining a lot more attention right now in the media. So to show you how effective uranium is, 1 kg of uranium actually generates as much energy as 3,000 tons of coal without CO2 emissions, right? And this is why uranium is the only commodity that will allow net zero carbon emissions and ensuring electrical stability at the same time, right? Because you can't have your country or your entire continent operating based on the whims and fancies of the weather, right? That's not the kind of civilization you want to progress towards too. And because of that, TD Securities recently revised their supply-demand balance for uranium demand. So basically what you're seeing here right now, in the box highlighted in green, is that we are going to see a sustained deficit going forward, right? And the uranium story is quite interesting because it is constantly developing, right? It is not very much static as opposed to or predictable as opposed to many of the other energy demand, right? The uranium story is gaining a lot of traction, and the Western economies like Germany, France, and the US, they are starting to look seriously into this. And I believe that these numbers is going to be updated soon, and it's going to show a even larger deficit going forward. And that is why we think that we are just at the start of the super cycle in uranium. But one thing that's quite interesting is if for anyone who's monitoring uranium spot price per se, you'll realize that there is a disconnect between the spot price and uranium stocks, right? Spot price is basically not going anywhere, whereas uranium stocks is gunning for the moon, right? And there's a reason for that, because utilities, you need to understand the uranium industry slightly better. So to give a very, very brief and broad overview of how uranium utilities operate, Utilities do not operate in a just-in-time manufacturing or buying pattern, right? They don't buy uranium when their stockpiles deplete, right? They buy it in bulk and in long-term contracts mostly. And they actually use up all the uranium supplies before going back to the spot market to purchase again. So there is little discretion on prices, right? They are agnostic to spot prices. You don't build a 20 or $30 billion nuclear reactor and then say, oh, uranium price looks nice today and it's cheap and then we're going to buy more, right? They're going to be buying anyway, regardless if the spot price is expensive or cheap. That is generally how uranium utility companies operate, and that is why you're not seeing much movement in the spot price, because the buying cycle has not arrived. It's going to be arriving soon in the next 1 to 2 years. And a lot of these companies are going to start to recontract uranium contracts for pounds in the ground, right? And we believe when that buying comes, coupled with the huge backlog of uranium facilities that's going to be built by China and India in the next 5 to 10 years, we're going to see a huge upward pressure in uranium prices, right? And there's more to that than meets the eye. So I'll explain more later on that. So uranium stocks is basically a barometer for the industry, because stocks are more speculative, right? Yeah, they can be bought by hedge funds, they can be bought by funds who have better foresight, and that is why we are seeing stocks pricing in this supply crunch. And of course, we think that we are still very, very early in the cycle. And this is not specific to this bull market that we think is going to come. This happened as well in the last super cycle in 2002. Uranium stocks led uranium spot prices by about 6 months to a year. And we believe that's what's going to happen in this cycle. And to add to that, we believe this cycle is going to be a lot more explosive, because what we are seeing right now is all-time lows in exploration for uranium, all-time lows for uranium spare capacity into the largest demand for uranium that we're going to see, right? In the last bull market, we didn't have this kind of conditions, right? In the last bull market, storage spare capacity was fine, and there was enough money to go around for uranium exploration. So we think this is going to be very, very explosive, and that is the reason you're seeing some disconnect, right? So on the broad uranium macro picture, surprisingly, it's the East that is driving this uranium or nuclear renaissance that we expect. Most of the planned nuclear facility builds are in China and India. Japan is looking to restart a lot of the nuclear plants, and they're looking to build a lot more. And our previous uranium bull cycle did not include the Western civilizations demand, right? But now what we're seeing is a huge shift in the West. They're starting to realize, because of I would think it's partly because of the cold snap, that they realize that those three, wind, hydro, and solar, is not going to do it for a truly stable, I think the keyword is stable, carbon neutral society, right? And that is what we're going to see, right? That's what we're going to be seeing. So India is planning to build 3 times more nuclear facilities by 2031, and this is not just talk, right? India have already contracted with Kazatomprom, which is your equivalent of the Saudi Aramco, because Kazakhstan is the largest producer of uranium, and Kazatomprom is the largest producer of uranium within Kazakhstan. So India has already contracted that much of uranium. China has pledged to be carbon neutral by 2060, and there is no way they can achieve this with solar and wind, right? So China, if you see on the right, have a lot of planned nuclear facilities under construction, not under kind of planned ones that is going to come online, and many being constructed currently. So this is the outlook for the East, and we believe the West will catch up soon going forward. So to give an example of how effective uranium can be in helping the economy, is that Germany has the world's highest electricity prices. You can see on the right, 0.34 cents, 0.34 per kilowatt hour, right? And Germany's electricity source mostly comes from coal, and for the ESG is mostly from wind and solar, right? And that is as opposed to France, which is a neighbor, where 70% of the electricity comes from nuclear. And if you look at France's electricity price, it's almost half of that of Germany. It's at 0.18. And this is what nuclear can help with bringing down electricity prices, carbon neutral. And also, of course, it helps with the way economies function, right? It's more or less deflationary with such low prices. So Bill Gates recently have been very vocal about nuclear and uranium. He says that nuclear will be absolutely politically acceptable, and that it is reliable and can deliver power day and night, right? So it is a direct address to what happened in Texas. Then he's heavily invested in uranium after we were invested in it first. And in the United States, this also in February reintroduced the Nuclear Prosperity Security Act, where it is going to be a legislation that they are mandated to store uranium stockpile. So we can see that there is kind of a semblance between when Bill Gates came out to talk about it and when when the US passed the legislation. So I think that we are on the right track in the West to achieve carbon neutrality with uranium and at the start of the cycle. So if you see, this is a projected demand. We're going to see a sustained deficit going forward into very strong demand going forward. Of course, this should be revised higher as more Western economies come on board with the idea. And uranium exploration have been declining. So this is the one that is very interesting, because in the last cycle, we did not have declining uranium exploration investments, right? So this is the fireworks that we think is going to make this super cycle even more explosive and a lot more different from the others. And one interesting thing about uranium that not many people realize that is that it's a very small market, right? With $20 billion, you can buy up almost all the uranium companies that is listed. If you compare that with Tesla, which is $800 billion market cap, Tesla is 40 times bigger than the entire uranium market. And the uranium market is supposed to supply up to 11% of the world's power now and much more going forward. So we think that it is a very young market, and we are very early in the cycle, and that's why we are excited to share this with our audience today. Our uranium portfolio performance, we outperform the uranium ETF. We're the green line. So July last year was when we started to invest. I think December was when we started to be more vocal about it in our newsletters and our webinars. And this is our performance for our uranium holdings, right? Yeah. So our partner is CMC Markets. For people who are interested in trading, you can use our link to sign up for a $200 bonus. That is all for my uranium presentation, and now we come to the Q&A portion of it.
So, okay, I want to reiterate something. On one of the slides, Nick was showing the US starting their strategic reserve, and this is not this will not be the first strategic reserves we hear about. I think it is, again, as we say, the global macro geopolitics is such that the US, as now they are thinking about the supply chains, right? There's a executive order from Biden to explore the security of their supply chain. They're looking at semiconductors, they're looking at rare earths, they're looking at uranium, and I think it is in preparation for contention with strategic not to say enemies, but competitor nations in this world, primarily China. And this will not be the first time we hear of governments starting to pay attention to the security of their supplies, right? So it's important to take note of this. And of course, again, it's important to note that Bill Gates, one of the richest men in the world and arguably one of the smartest guys around, who knows the direction of where the world is going, and he happens to be really good friends with Warren Buffett, which is probably the most successful stock investor of our time. and I'm sure they talk about it. So I think it's only a matter of time where it starts to take to get a lot more press. And I think when all the press reports comes out about these things, then all these uranium buffs will be very happy again, right? So we are ready to take a question. We have a question for you, Nick. Why is uranium exploration declining if there is so much demand?
Yeah, so that's a good question, right? One of the reasons why was there was a lot of overhang from the previous cycle, where uranium companies were actually crushed by the oversupply of uranium, and people are not willing to finance loans for these companies to start exploring again. So I think the cure for prices is the cure for this is for uranium spot prices to go much higher before a lot of these uranium miners will start to have an incentive to start looking for pounds in the ground again. So that is one of the reasons, is because it is an overhang from the previous cycle that we're seeing the huge decline in exploration.
And this is interesting, right? Most you always hear commodity super cycles, right? And the reason they are super cycles is, I guess, the way the world reacts is like this, right? When the price, for example, the very simple one is the price of oil, it starts to go up, then the price of exploration projects becomes more viable at higher cost, right? So then as oil goes up, more and more people will more and more companies will raise funds. They'll go explore different regions. They'll dig deeper. They'll dig in different places. They explore shale, whatever, right? And of course, these projects you explore oil is not going to be like 2 days, right? It takes months and sometimes years to build the rigs and to get to where it is, and then to get it viable, to get the pipelines ready to ship it to somewhere. And once it all comes online, it tends to all come online around the same time, because everybody has this bright idea that, oh, I'm going to explore oil, right? And they do this, and then within a few years, there's overcapacity, there's oversupply, and because of that, then the prices collapse, goes down, and then because it goes down, then all these projects are shuttered, right? They go bankrupt, they close down, they it's very hard to recover, right? They just shutter and then they just close down, and as more and more close down, the price goes down, close down, and then somehow they find that, oh no, there's more demand than supply as the economy starts to pick up, right? And tends to, when high oil prices, it tends to hold down the economy. Everything becomes more expensive, right? And governments start to raise interest rates to control inflation and things like that. So what happens is that they lag, right? So the demand shoots up, the supply starts the exploration projects start to increase. Then when 2-3 years later the supply comes, then we have massive oversupply. Then we have the commodity price collapses, and then they close down all the facilities. Then after a while they see, oh no, we don't have enough supply again. So it goes like this. If you look at all these oil prices, and I think the uranium also, it was made worse by the Fukushima explosion, the nuclear reactor meltdowns. Got a lot of bad press, and everybody thought, I don't want to have a nuclear reactor near me, right? So it became kind of the bad word, right? More governments that talked about uranium projects, they get some backlash from the press, they get backlash from the voters. So nobody wanted to be associated with uranium. That's why Bill Gates came out to say it is a viable, it is a good alternative to fossil fuel energies, right? Energy, right? And in fact, he says it's the most efficient form of energy. And in the time that has passed since Fukushima, the technology to dispose of nuclear waste, which is the waste product after nuclear fission, right? After producing the energy, it's become much better, and the technology has improved by a lot. That's why it's become a much better option than before, and that's why we have so little exploration from before. So of course, as it starts to get more press, you'll see in the years to come, there's going to be again a lot of projects trying to dig up uranium, and we'll see that happen in the years to come. Nick, there's a question. Do you guys have any good, reliable sources to monitor uranium news and outlook?
Yeah, I think our track record membership is we do very detailed, actually, for all seriousness, we do very deep dive into uranium updates every month. Uranium is a very, very obscure market that you do not have much news about from major news outlets. So we do have access to some people who are inside the industry, some of who are insiders trading the physical, and also people who are also in uranium companies. So that's where we get some of our insights from, and we do publish a deep dive on a monthly basis. So for outside reports, you can read general news, but very much not anything specific about when certain mines are going to reopen, how many pounds are new exploration and stuff like that. So this nitty-gritty details we do share in our community membership.
Right. So is there, do you believe uranium mining companies' stocks will go up prior to the increase of the nuclear power plant company stocks?
Yeah, I think so, because nuclear companies or utility companies, they purchase their stock way in advance, right? And I think uranium cycle actually works backwards. Not many people know that, is that people think that uranium from the ground comes out, and then they process it, and then nuclear fission, and then they sell it to the company, right? But actually, it works backwards. Utility companies purchase the pounds first, and then they go through the process of refining it. We believe that the mining stocks will do well ahead of these plants coming on. And uranium, as we said, we think is cyclical. So we will think that the market is getting saturated when spot prices becomes high, and we see a lot of miners trying to explore a project, right? And I think uranium cycle can last longer than a normal cycle, because it takes about 1 year for a mine to come into operation. You can't just switch on the plug and then you get uranium out of the ground. Right? It takes about 1 year. And for exploration, it takes about 5 to 10 years for proper exploration. So I think this cycle, if it lasts, it can last for, it's not going to be a 1 year thing, it can be last for 5 to 7, up to 7 years. So there is a lot of time to ride on this. So I think the stocks will do well ahead of even plants coming on.
Yeah. Is there a limited period for this uranium bull run? There is, after a certain period, will there be oversupply? How long this period are we expecting?
Yeah. So as mentioned, I think the period can last for 5 to 7 years, because it takes around that time to explore the feasibility of a mine, and it takes about 1 year to start a mine after the feasibilities, after everything is done. And I believe that it will get saturated when spot price becomes too high, and a lot of junior miners start exploration projects. So it's not going to be anytime soon. So we will update on such developments.
Yeah, and it's the reason why it's not called a cycle, but a super cycle, right? It takes a long time for these things to happen. And if you had time, you look back to the chart that Nick, you showed the uranium plants coming online. Yeah. So if you look at this, it's a lot. The light blue is the ones that plan, right? And when you plan a project, it's not like building a house. It's just not very cheap, right? There's a lot of feasibility studies. There's a lot of design into it. So when you start, you almost never stop unless a massive disaster, much like a Fukushima, changes the paradigm, changes the political climate. And we believe the ESG climate, the green initiatives, the carbon neutrality policies around the world, where they have to reduce the carbon emissions, it's almost an inevitable outcome that they will have to seek alternative energy. That's for sure. They need alternative energy, and alternative energy, as has been proven recently, it was a shock to many people that electricity prices, there were households getting electricity prices in thousands of dollars, and nobody wants that, right? And imagine a first world nation, the most powerful country in the world, with access to oil, strategic reserves, and everything, and they had blackouts, right? Blackouts in the at the height of winter. So that's very bad, and I think that's going to drive this drive these movements towards nuclear energy for many years to come. We have a question. Grace asked, why should we join the community membership? What's offered, Nick? Maybe you want to give a wrap of what's offered.
So what's offered is so all these timely updates on mostly most of the questions that we're getting about how long will the cycle last, when do we get in, when do we get out, that is all addressed. Even we address specific stocks that uranium stocks that we are interested in, because of course there is some partiality to which stocks. There are some uranium stocks which we like a lot more than other uranium stocks, right? So not everything is created equal, and that's why, to answer all the questions above as well, to buy a uranium ETF, we don't believe in buying uranium ETF because we need to be very picky about uranium counters for a lot of reasons. Because some uranium mines have other, they don't just mine uranium, they mine other metals like zinc, copper, and some of these have agreements which will actually pay for the mine. So these stocks, they actually perform a lot better than the other uranium stocks. So granularity is very important, especially in the uranium space. And this is what we cover in our community membership, right? And of course, on top of that, a lot of other things on the global macro picture of what's driving all these things, right? As we have shared earlier in our presentation on the macro picture on interest rates and everything, because all these, they do affect exploration costs as well, right? Because if interest rates is high, it's going to affect funding for these companies to explore, right? And that's why if you're investing or trading, nothing happens in a silo, right? It's not, you cannot trade in a vacuum, right? You need to understand what's happening in the world, and that is the community helps you with.
Yeah. So just to cut it short, Nick, we're running out of time. For the community membership, you get weekly podcasts as well as our weekly reports on various sectors that we like. Most importantly, you get our equity model portfolio as well as a global macro portfolio where we talk about currencies, and so that's I guess that's the best way to witness and see how we implement our trading ideas and our macro views into actual trades, right? Most like for some parts of the, I think earlier a good example would be last week. At the height of the panic, a lot of press reports, the ones that you see on TV, they're saying this is the end of the world, this is the start of bear market, and we repeatedly tell people, of course, we were suffering some pain. We tell people this is not a bear market, this is not a bear market, and this is the reason why. And some of the slides that you saw earlier just now, we had a special call. An impromptu ad hoc call with our community members to reassure them that these are the things that the Fed is looking at. And many people dismiss the Fed press conference, right? But I watched it several times through the day, and I found that he actually is telling us something very significant, right? That they will not intervene in the bond markets because there's no need to. This is the fruition of their policies, right? And this is exactly what has happened. The market has stabilized. Of course, this could be famous last words tonight. It could just absolutely crack again. But then we are very timely on our analysis of the markets. So if you truly want to understand what's going on in the world, from our point of view, of course, we are wrong sometimes, right? But at least this is how professionals do it, right? We revisit macro themes. We don't overreact. We don't panic. We don't change our views just because the markets disagree with us for a little while. That's the thing. You get access to our thoughts and you get access to our model portfolio, right? And that also answers one of the questions where Nick answered the question: do we buy the ETF? I think the ETFs, if for the want of you don't have anything, don't know what to do, you don't want to pay the subscription fee, you don't want to buy your stocks by yourself, by all means go to ETFs. But as we showed you on the chart, it severely underperformed the curated list that we have. But in the absence of having anything better, then yes, better than nothing, right? But there's always a compromise, right? Let's take two more questions, then we call it a night, right? A very macro question from Rizwan. Is the plan to be long equity now until the Fed hike rates. So Richwan, I think you are one of the regulars who asks us questions. If you're the same guy who asks us questions on our social media, so thank you very much. But I think you very well know the answer to this because you're very active on our social media, right? Our view has always been to buy risk assets, right? Risk assets meaning any assets that benefit in an environment where there's a lot of money in the system. Buy assets such as bitcoins, equities. You have to be invested. The worst thing that you can have in this environment is to have cash. Of course, don't have cash is even worse. It means you're poor. But let's just say you have cash. You are invested in cash. This is a myth of the past generations, right? Where you always need to have some cash. It is wrong, right? In the days where you can easily convert your assets into cash equivalents, there's really no need to have cash, especially when the governments are giving you negative interest rates in some countries, very low interest rates in others, and their stated aim is to create inflation. That means if they succeed, your purchasing power will decrease by at least their targets, but that is only against consumer baskets, right? A basket of consumer goods, right? So you very well know, right? If you go out today, you buy a meal, it is much more expensive than what you used to pay for it. But that is only in terms of consumables, right? But what about against assets? All right, if you want to buy a stock of Tesla last year, the money that you pay is about 20% or maybe 10% of what it is at some point the time this year, next year, right? And this is asset inflation. So yes, you should. This is no, I am, right? This is what I'm telling you. I am invested in assets. Okay, final question. Let's see the final question. I will see if so concretely what the membership looks like. You again, if you're interested, click the link. There will be a thorough explanation of what it's all about, right? If you click the link, it will show you. If you have questions, please email. The link will have an email where you can ask questions, right? I don't want to take up too much time on the sales pitch. But finally, I think this is a good question to end it up. We've spoken a lot about uranium, but one person wants to know what's our view on dollar. It's been gaining strength recently. I think the gaining strength is an opportunity. The dollar is on a massive downtrend against the selected currencies that we have in our model equity portfolio, right? And over time, you will see the government policies are engineered for a weaker dollar. They are going to spend massive amounts of money. They are going to keep rates extremely low for the next 2-3 years. So it is almost inevitable. If they succeed, the dollar will be much weaker from here, right? So with that, I think that's it for tonight. Thank you very much for attending. Thank you very much for the questions. Thank you very much for always challenging our views and giving us opportunities to express ourselves better and help each other in understanding the markets. For all of you who asked, for some of you who asked a lot of questions about this community membership, thank you for your interest. There's a link there. Click. Don't log off after this thing closed. I think there will be a pop-up for a link where you can click and then find out more information, right? So thank you very much. That's it for tonight. We'll catch you again very soon in the weeks ahead.
Right.
Good luck and good trading. Thanks, Nick. Thank you very much. Bye.